Hello again, and good evening, good morning, good afternoon to our community, Filipinos in New Zealand, Pinoys in NZ. We want to welcome you again to our live and webinar where we educate our kababayans how they can own their first home in New Zealand. And actually, it's not impossible. Before, it took me so long to actually get into the property ladder. That's what we call it, actually, property ladder. And I think for me, 7 years. And now, since we started what we're doing in our community, we see like people actually getting into their first home in just 1 year, 2 years, especially if you're already, of course, a resident in New Zealand. And tonight, we're back again. Maybe you can buy your first home before this year ends. I think that's still possible. Gift your family a home, your own home, because as we know, renting in New Zealand is quite expensive. And I have with me um, one of our partner in Pinoys and NZ, Filipino friends, Neet Dhiman from Mortgage Supply. So she's gonna share to us step by step how you can buy your first home in New Zealand. And they're based in Hamilton. So I'm gonna call her on the stage now. Very beautiful. Hello, Neet. Good evening to
Hi, how are
you.
you, Kristen?
Good. Lovely to see you here. And we're so really happy that you joined and supported our community. I know we have mortgage brokers in our community, but at the same time, we also have some Filipinos who also work with other nationalities. So you're basic. Can you just share a little bit about you, Neat, before we get started, and your passion to actually serve um,
Firstly,
immigrants?
thank you for having me here today, and I am so glad that I could be a part of Filipino community as well. So, thank you so much for actually accepting me with so open arms. So I am Neet, a mortgage advisor by profession. Have been in New Zealand from last 15 years, and my passion started when I was in the process of buying my own house. So I learned so much that I felt that, wow, there is so many things involved in it. And as a first home buyer, there are so many things that you don't even realize. And during that time, I felt that there is a need for a person who can educate those newbies to get into the property ladder. So that interest started, and we bought our own investment as well. So the way I got into the property ladder and the problems that I faced, I would like nobody else to face. And that's where I am.
Yes, yes, I totally understand what you're talking about because it's so complex that you need that guidance. And again, I remember sometimes it put people off when they feel like, oh my gosh, it's too much. And guys, it's way, way better. A lot of our kababayans, we call Filipinos our kababayans, they go directly to the bank, and sometimes they don't get that approval because they haven't prepared. And
Mm.
so we really encourage our community to have a mortgage broker because it's easier, way easier. They will guide you step by step, and I think the best part is they get you a better rate, interest rate to negotiate. So tonight, Neet will be sharing to you. She's have a presentation to share to you, whether you're watching this live or recorded. We really would love you. I'm sure you're dreaming of buying your first home, and we're just opening that possibility that it's not impossible. Neet, I'm just gonna share quickly that um, we know, like we know that there are Filipinos here for like 7, 10, 15 years didn't own their first home yet. And probably because they thought it's impossible, or they are surrounded with people who also are not um, buying their first home. But then Mel's and I, like Mel's with me in Pinoys and Ensign, as soon as she started to buy her home, she influenced her circle as well, her workmates, her colleagues. And sometimes you just need to have that people around you. And if not yet, that's why we have this webinar so that
Yeah.
we encourage people to, like, that sometimes you just need to like, oh, it's actually possible, especially when they hear stories. So we have Filipinos who move here, bought their first, they thought that they can only buy their house in 3 5 years, but then for some reason they managed to buy it because of education, like webinars
Yes,
like this,
yes. And
in
that's, yeah,
2 years.
that you are so right in saying that, because the education is the main part here. When you are not aware, you actually don't know. And the minute you get a little bit of information that yes, there is a possibility, you want to explore it. And
Yeah,
that's why we are here today, to give them that ray of light that yes, it is achievable and you can do it.
especially with somebody's help, professionally. So
Yeah.
I'm
Yes.
gonna share your slide. That's okay. Yeah. Here you go.
Well, thank you. Thank you so much. As I said that Neet Dhiman, that's my name, and I'm a mortgage advisor. And today we are going to help our friends, our community, anyone to educate them so that they can buy their first home. So, would you move the screen for me, or
I think
Christine?
you can move it on your side, just the slideshow. Yeah. Can you do that? Slideshow. There
Yes,
you go.
it is a slideshow. Sorry, I'm just.
There's a little bit of tech. They always have this on Saturdays, and if you're watching this, that's all good. And yes, we'd also love to hear from our viewers. If you're watching this again, recorded or live right now, you can prepare some questions as well after this um,
Okay, I'm
webinar.
just trying to work out how am I be able to move this. Sorry, bear with me for a second.
That's okay. So imagine having your first home in New Zealand. It's such a dream come true, really. And I would say it's also a way to build wealth in New Zealand. That's another thing that we talk about here. Choosing your first home is
It's not
important
letting me
because
move.
you will be leveraging from that first home to your next property investment later. So, yeah, how, how do you
Um,
usually, like the usual way you move your screen is this, it would be the same. Like if
um,
you
Somehow it's just not letting me go. Proceed with that second next screen. I don't.
slideshow, maybe a slide,
Yep, it is slideshow.
is it not moving? I'm just gonna
It's
maybe
not.
just click that one. When you went back to that earlier, you can just click it again. If you go back to the main one, it's a little bit of a technical
Sorry, team.
error.
I'm just trying my best here to get this moving. It's just not letting me
Yeah,
go
you
to the
can
next.
maybe just click that second page. If you can click that second page there.
Um, I would need a technical help here, which I've just um,
so
just
So just a little bit while you're fixing them, I'm just gonna share as well your website as well, just to there you go, it's working. Can you see that?
Are
I'm
you
just
able to
gonna
hear me?
yes, you can.
Yay, finally. Right, here we are. And
So you
there
can
we go.
just move it like that. Yeah.
Yes. Sorry about that before. So we are all sorted now. And once again, I welcome everyone to be here and those who are willing to know more about how to buy a first home. So, today we are going to talk about how is it possible to buy your first home, and we will discuss what is the importance of working with a mortgage advisor to do your financial planning, because financial planning is the most important thing when we are looking to buy a house, because everything revolves around money here. So we will be learning and talking more about this today. To start with, I would like to discuss why do we need a mortgage advisor. So there are a lot of factors, because as we all know, buying a home is not a simple process. It is quite complicated, and sometimes the people who are wanting to buy a home can feel overwhelming in this. So as a mortgage advisor, my role is going to be to take all that stress off you and act as a middle person, an intermediary between you and the lenders. Remember that as a mortgage advisor, we have access to all the lenders. So it means we will not be taking you just to your own bank, but possibly to another bank who can give you better rates, better policies, better services. So it's not that you are stuck with only one lender. We have the option to go to as many lenders as we can, depending upon your scenarios. We be able to assess your borrowing capacity so that you know beforehand this is the amount of money that I can lend from the lender. And then, for example, if you would know that I can buy a house worth 700K, you will not need to look at properties which are 400K, because then you know your budget. You would know that this is my range, and you will be able to shortlist that kind of properties. As a mortgage advisor, we also help to provide advice on loan structures. So it is not that loan done, finish. No, we will help you. What we can, advise on what else can you do. Do you need to fix your loans? Shall we do floating? What are the other options that you can look for depending on your particular situation? We'll be able to do all your paperwork, get your pre-approvals. We and this also means that you do not need to take a day off from work to do all this. We are doing everything behind the scenes for you so that you can enjoy your home later on. So that's where a mortgage advisor comes in. And of course, it can help you reduce your stress, the anxiety, and you will not be feeling overwhelming at all. So what happens that when you are working with a mortgage advisor, you feel that when should I get in touch? There is no time limit. You can get in touch with a mortgage advisor at the very beginning of your journey. Whenever you think that, yes, I want to buy a house, and you feel that, yes, my friends have been doing it, I want to get it checked, get it assessed whether I can buy or not, you can get in touch with a mortgage advisor and they can help you assess your situation. We can help you find out where we are sitting at the moment. Are you ready or not ready? Or how long will it take for you to be ready to buy a house? Or when you think that you need to get a pre approval. So, pre approval is something that we can help you to know your amount of loan that you will be eligible for from the lender. So yes, that could be another option, that you got the pre-approval. Now we want to see an advisor. What else we need to do? Come and see us. Or when you are in a position where you want to compare which bank has better rates, which bank has better features, which bank has better structure, that's when you can come and see a mortgage advisor. And once everything is done, you got your first home, you can again see a mortgage advisor when it is the time to refinance or restructure your loan. So it's not that I have done this, now I cannot go and see a mortgage advisor. Whenever you think you need some information, come and see a mortgage advisor.
There you go.
So now the question arises, how to get your deposit sorted, because when we buy a house, we normally need a 10% deposit. And sometimes people think, I do not have that kind of money sitting in my account. What should I do? I cannot buy a house. Well, good news, that's not true. So you can buy your house by using your Kiwi Saver. If you are contributing in your Kiwi Saver from the last 3 years, you are eligible to use that Kiwi Saver amount as part of your deposit. Just remember, you just need to leave a $1,000 balance in your account and you can use the rest. So, for example, if you are buying a house for 700,000, for example, the 10% is 70,000. And if you have been, you and your partner have been contributing, some people may end up having 20, 84, $85,000 in their Kiwi savers sitting there. No use until you are 65 otherwise. So use it to buy your house. That is the scheme that government has opened up for the first home buyers. And I think we're very lucky to have this because it's good to have that money for your first home. Another way of getting your deposit sorted is using your savings. Put Get a habit of putting some money aside when you are in the mind frame to buy your house. So if you think I'm ready for buying a house, start putting some money aside because that's is going to be the money that you can use for your deposit. Other option could be getting a gift from the family. If you have a family overseas or if you have a family local and you think they should be able to help you, you can also get a gift from them for certain $1,000 and use it as your deposit. And the good thing, you can combine all these three things together to get your deposit sorted. A Kiwi Saver amount, a little bit of savings, a little bit gift from the money. We can get all this money together and be able to get the deposit sorted and be able to buy your house.
So the Kiwi Saver, just a little bit to clarify, at least 3 years, right? 3 years.
Yes, yes. So you need to be a contributing member in the Kiwi Saver from the last 3 years. If you just have the Kiwi Saver now and you think it is going to be 3 years next year, start putting some extra money in it because then you know that you're going to use it for your next in the next year. So, some of the documentations, because sometimes people feel that there is so much paperwork, so much to do when we are looking for a house, and yeah, it is true. I'm not gonna lie. There is a documentation involved, and that's where us as a mortgage advisors we come in handy because then you don't have to worry all that. You just provide everything to us, we put all that through together, get an application ready for you, and then take it to the bank. So if you're using your Kiwi Saver, we would need a letter from your Kiwi Saver provider. This is the amount we can allow to use. We would need to show your income, how much is the income coming, and if you are uh, not self-employed, if you're an employee in a company, then provide your pay slips, your bank statements, your contract that you are a full-time person, and you need to provide your IDs, your address proof. And here, the most important thing is your credit history. The banks always check credit history when they are giving you some lending. So start working on it. Even if you are not going to buy a house this year, you're thinking of buying it next year, and you know that there would be something that you might have missed your payments on, get that sorted beforehand so that this does not come in our way of buying into a home. Um, Another thing would be some evidence of your credit cards, if you have any loans, if you have any afterpay. We can help you sort these ones out before we take your application to the bank because these credit card limits, the personal loans and afterpays, banks see them as a debt. Okay, so we can help you. Maybe if it is too much limit, you might need to get the limit reduced a little bit so that, and as I said, everything is done before even we are going to the bank because we are getting ready for the bank, so we can
I guess
reduce
that's
the credit.
another, and because we see a lot who kind of get discouraged. This is very good practice because we see some they go straight to the bank without preparing, and then suddenly they don't get it, and they don't kind of lose hope and they don't pursue anymore. So that's why it's
Yes, yes.
important to have a mortgage broker who can help you before you even go, so that your
Go to
chances
the
are
bank.
high.
That's right. Yeah. And the good, it's sad, but the banks will not give you any advice. They will not tell you, you reduce your credit card and then you will be approved. They will never. They will say, nope, you are not approved. That's it. No reason, most of the times. But as advisors, we know that, this is the reason. Let's reduce your limit and it will help us. And yeah, that's where these, and afterpay is another one. Sometimes we don't even realize it because it's so handy, isn't it? Everyone want to have an afterpay, and when banks see it, they don't like it. So
After
we
paying, keep on increasing it too. I'm surprised I already have like $3,000 something available. I'm like, oh, how did I get that?
because yeah, it's a trap. Yeah, so
Yeah.
afterpay is another thing that we encourage our clients to pay off. Try to reduce your debt as much as we can, and there are strategies for that that I'll be talking further in my presentation. So there are some other requirements which needed to be fulfilled in addition to the documentation we have. First of all, of course, the minimum deposit. We have to have it. Well, banks love 20% deposit, but for first home buyers, there is provision that they can do 10% deposit as well. And there are some lenders who are doing 5% deposit too. So there are different criterias for that. We use the calculations to check and see which criterias the clients are meeting, and then we move and proceed from there. Another is check your credit score. If you feel that there could be something could be missing in the last 5 years, check it. And if it is low, there is no use applying now. It means we will wait a little bit, get our credit score sorted before we go to the bank. It's good to get a pre-approval done. Otherwise, these days banks are also opening up for live deals as well, and that's fine, because when we are getting an assessment from the mortgage advisor, either it's a pre-approval or it's a live deal, which means we have got the property and then we are going to the bank. Mortgage advisors, we do help do all the assessment beforehand. It's also good to know that there is gonna be some legal requirements where you will be spending some money for the solicitor. So we always advise to put some money aside for that. That should not come out as a shock later on that, oh, I have to pay $3,000 to a solicitor to get that sorted and I don't have that money. So no one else is going to educate you for that. But if you are working with an advisor, we will be preparing you for that. We will be asking you to put some money from your savings for all these extra expenses. And when it comes to co-ownership options where more than one household, for example, a husband, wife, and a sister, or a mother or a brother, are buying together, we do encourage to get legal advice, because then there are more complications added to it, and we want that everyone knows what their rights are.
We're
Moving on
seeing
to
more and more of this nowadays. I like
hmm,
co-ownership because it's getting harder. So they again, this is actually good to know that you can do co-ownership so long
yes,
as you have a proper legal and you do the financial due diligence. But it's like Filipinos were very close family ties, and it's just gonna help you get into the property market faster if you
yes, yeah,
do it with your
exactly.
family. Mm.
And
But
especially
yeah,
for first home buyers, or especially for families who are already living together, they don't even have to worry about that, because they're already their sisters living with the family, with husband and wife, or there are two sisters or two brothers living together. You can buy a home together. And at some stage later on, when you feel, you can buy the other person's share, and then the property is on one person. So there are all those legal options available for you to get yourself on the property ladder, because this is the right time to get into the property. The prices are good, the interest rates are getting down. So if possible, there is not going to be a better time than this. And then we have this Kayangara first home loan, which is where you can buy a property with as low as 5% deposit. There are some eligibility criterias, like the income criterias to it. And We see if the household income together is 150K or less, or there are some work options. And if you will fall into this, of course, we will be talking to you about this one. But this is another good option to get into the
So 100,
property.
150,000 combined less combined income.
Yes. So
Or
one, if yes, so if it is individual with one dependent, so there are some criterias which are available on the website, and I'll be more than happy to share. It's just if it is a single person, then your income should be 95K a year or less. If it is a combined, like a couple, husband and a wife, then the income should be 150K or less for a year. And the dependents should be like one or two dependents if they are in the household. But there are, of course, more eligibility criterias in addition to the income criterias. And we can have a whole lot of different session on Kayanga or some other day if we want. But um, I'm just wanting to say that there is this option available as well, which is
like
for
yourself.
low income earners, which is good. I think it's really good.
Yeah. So there are many
Okay.
options out there to make it
Yes,
possible.
to
Make it.
definitely make it possible. And as I was saying before, it's not only the banks that we work with, we are also working with non-bank lenders. They have like whole lot of different requirements, different criterias, which are way easier from the banks. So if you think, if you're mentally ready for the properties to buy a property, we will try our best to get you in. Okay,
Mm.
so it's just getting yourself ready first. And this is a roadmap which shows us what are, like, starting from the beginning to the end, what could be the different things you will be engaged with while you are, on your home buying journey. So the first and most important is preparation and planning. That's where we get in, because we are preparing everything for you, we are planning for it, we are, you know putting our best foot forward. And then if we need going to get a pre-approval, we go to the bank, which is going to be the best fit to get a pre-approval for the bank. And once you get the pre-approval, the clients can start looking, because now they know what my budget is. If you find your beautiful house, your dream home, you can then put an offer, get the contract signed. We then take that contract to the bank, finalize your loan amount. And after that's done, the solicitor steps in. They will help you with all this legal and settlement process, and which take a few 2-3 weeks to just get it settled into. And then once that's done, there will be a settlement date, which is normally 3-4 weeks as well. And once you are in the house, that's when the whole process kind of finished. But as I said, our job as a mortgage advisor does not finish there. We will stay in touch with you to see how's everything going. We would have helped you already with the structure. We will get in touch with you to see how's that loan structure working with you, how's that floating rate working for you, or the other structures that we might have done for help them done. um, so we will follow up on that. So it's important that for us, our role does not finish into just getting into there, but also give you that additional services to check on you guys, how are we doing in that whole home buying and settling in process.
I just want to add a neat, just to caution, and that's why I love what we do here in Pinoys and NZ, because some we know some of our kababayans, because we hear a lot of problems in our community where they went to an open house without pre-approval, signed something, and they didn't realize it's actually a legal document, and they don't
Mm.
even have pre-approval yet. So it's
Yes,
so important to, before
yes,
you even go to open homes. I guess you can, but don't sign anything.
yes,
Sometimes
yes.
there are real estate agent who, in a way, sorry to say that, but pressure someone to, like, you
Mm,
want this
yeah.
deal. And so
Mm.
that's a caution for everybody who's thinking
Yes,
of
that's right. That's right. And whenever I see any, especially the first home buyers I'm talking about here, because they are so naive, right? We are educating them on each and every step, what to do, what not to do. But sometimes it's important to know whatever you are signing, it's a legal contract. Okay. And whenever I have my first home buyers, I make sure that, to be with them in all these processes. And it is so cool, so nice that you get into that trusting relationship, that even when they are going to look for a house, they contact and they just quickly give me a call and say, Neet, we are going to go and look for this property, what do you think about that? So that's the kind of trust we ends up building with our clients, because it's it's not just as a one-off process. Home buying is an emotional feeling, isn't it?
Mm.
And that's
It's a
what
very
I
big
feel.
decision. It's our biggest debt in our lives too.
And that's where you have to be even more careful,
Yes,
isn't it?
yes,
Whenever we even buy a car, we test drive it before buying it, isn't it? Here, sadly, we don't have the do have this option of test driving a mortgage, so that's why it is even more important to think
yes.
carefully when
And another thing that we encountered is that that's why we keep doing these webinars, because there are some of our kababayas actually got in trouble, losing their deposit, because there are sadly some people out there who are
yeah,
not into the best interest of the client, and they just want to make profit, which is quite sad. And that's why we continue to educate our community to be aware of what you're getting into, because again, be owning is so nice to have that feel of owning your first home, but
yes.
if you don't do it properly, you can also get in trouble.
Yeah,
Yeah.
that's true. That's true. And that's where that initial assessment comes in handy. Because what will happen if you are buying something which is over your budget? You bought it, all right? You got deposit from your friends, you got debt, and you didn't tell anyone, and you're just buying anything. We need to realize that, as you mentioned already, it's a debt. We have to, pay that debt eventually, but it should be within our budgeting income. Whatever the income is, we should be able to pay off that repayment. But if we are buying something which is way over our budget, sadly people get into mortgagee sale then, and
Mm.
that's a sad part. Nobody
Yeah.
wants to buy $1 million house and then not able to pay off your mortgage, and then it ends up being a mortgagee sale. The banks won't think that. That's where it is important to get your assessments done, to get your budgeting practices in order before getting into this commitment. And that's where a mortgage broker comes in handy, to educate each and everything through the whole process.
Yes.
All
So
right. Moving. And there we are talking about all these things, and then really coming up to these places where we got the house, we got the loan. Now, what next? Isn't it? It's like it's not finished. The game is not finished. It just started. Um, so
that's so
as
true.
as
Now you have
yeah,
a big debt. So how do we pay it off faster?
yeah, exactly. Now we need to work on. We don't want to pay the loan until we are 70 or 75 years old, isn't it? So now the
Yes.
strategies come in to pay off your loan quicker. Okay. So here, just these are just a few, but there are way more. When for each and every situation, there is way more information that can be given for your personalized situation. So some of these would be, rather than paying it monthly, pay fortnightly, because there are 52 weeks and 26 fortnights rather than 12 months. You end up, if you pay fortnightly, you end up paying one extra payment in a year. So it's a calculation around it, but it does help to pay off your loan quicker. You might end up reducing your 6 years or 5 years off your loan with just one change. And another trick would be, rather, if you have, for example, a loan which is 24, let's say 635 a week, just a random number, 635 a week. So rather than paying 635, make it 650 a week. Those $15 will not make a big difference in your weekly budgeting, but it will make a big difference in your repayments. So another trick would be any extra income that you are getting, rather than having a big party, we can just pay it off towards the loan, pay some lump sum loans. And this comes in handy if the loan is structured properly. If there is a flexible loan rather than a fixed loan, then these option comes in really handy. And this is good for those people who do get big commissions or bonuses, once a year or twice a year. So again, all of these options are not for everyone, but for those who can make it, and again, as per as your unique needs. We can look at, rather than fixing it for 5 years, fix it for less years if we know that the interest rates would be coming down. And as mortgage advisors, we are aware of what's happening in the market. This is our job, this is what we do: keep ourselves educated, informed of what's happening in the market in terms of interest rates, in terms of house prices, and all the things around it.
Mm.
um,
This is
Refinancing.
so good. This is just so good. I just want to add a little bit because when on our first house mortgage, did not know anything about it. We just went to the bank, and now that this is so crucial to find the right structure of your loan because you save a lot of interest in the end,
Yes.
and that's why we love like hearing from our mortgage brokers in our community because we get for those who are actually just went directly to the bank, you miss out,
You
guys.
miss out big. Yeah, you do. Yeah, I cannot agree more, because the banks, they are not allowed to advise anything, and they never advise anything. They will say yes to whatever you said yes to. Advisors, if you will be thinking that, Neet, I want to do this, I might advise a little bit, guys, how about we, if we want to try this one? So we are allowed to advise. That's what our job is, to advise you, give you options, and then you can decide. Decision is all going to be yours, but we can give you options, additional tips and tricks to do things maybe in a better way. And
Mm.
if the interest rates, we know the interest rates are coming down, we can refinance the loan, just
The
refinance it.
question
And
is, so if someone has already got a loan directly to the bank, and they move to a mortgage broker later or something to refinance to
mm,
have a better deal, is that
yeah,
something that you would encourage if
there
they have
is there
existing loan?
is yep, so there is a rule to it.
Mm.
It means, if you have just recently fixed, there is
Mm.
always a clawback period. And
Mm.
when we encourage or support a client with a refinancing, we always look at the bigger picture. We will
Mm.
only refinance if there's a benefit for you in it. Because
Mm.
otherwise, if you are losing interest, or if you're losing some money in the whole process, it means the whole process is not beneficial for you.
Yeah.
So refinancing is, again, it's an assessment again for the whole. We will look at a bigger picture for you to say, is it beneficial for you? We will then discuss that these are the benefits you will be getting. And if it is not, there's like, no, let's wait for another year. Let's wait for some more time until your fixed is finished. So again, there are
Mm.
lots of situations and scenarios around it. And then
Mm.
these products like offset accounts and revolving credits, not all banks provide that. Some banks will have an offset or a revolving, or some will have none of these, or some will have both of those. Depending upon your family situation, then we do advise clients to, you able to use these service so that they can save interest. Sometimes in certain situations, you wouldn't even end up paying any interest on certain amount. How cool is
Yeah.
that?
This is actually really something big that people needs to understand. And Mel's is my partner in Pinoys and NZ, and she have this big lesson learned with this revolving credit that she wasn't really aware what it's for, how will it benefit to her, and she end up with like 100,000, and she's not even like maximizing that, so she end up
She
paying
wasn't
more
even using
interest.
that.
Yeah.
Yeah.
So that's why we talk a lot about this, and I think as soon as you have your own mortgage broker, you ask questions about this because they
Mm.
will help you better. Because if you go straight to the bank, they won't explain it to you,
No.
and sometimes you actually pay more. You end up paying more, and even like a point, you know, 0.1 percentage, maybe 0.5, looks so small in the interest rate can affect your mortgage in a really
Yeah.
big way, right? In
And
long
why
term.
why to say pay interest if you can save it, isn't it? I
Mm-hmm.
mean, that's a common logic. Why are we even paying an interest on that? But again,
Yeah.
depend. It's again, it has like pros and cons, both of them, and we have to look at the whole family situation before we advise somebody to have these accounts. So it's where it works. It should be in your benefit rather than harming you, because we don't
Mm.
want you to pay rather than more interest, and rather than able to save that interest. So that aim should be solved. All right, moving on. There are some more tips and tricks that I would like to share with everyone involved. Um, it's important to understand that only buying a house is not the purpose. There are other costs involved, which includes your legal fees, the builder's report that you would need to get it done before you put conditions on there, before you settle into that house. You need to get it checked that the building is good, the house is in good condition. There are limb reports. Sometimes you have to get the valuations done. If there is less deposit, there will be moving costs involved. You will be paying rates and insurance. So for all this, there don't use end up using all your 100% money into it to start with. So we always encourage, save some money aside, put some money aside. There will be more costs involved. It could be one off, of course. They are not, you don't do with these things every time, but it's good to have some money put aside. Getting a pre approval or a pre assessment done. There are some banks who are not doing pre approvals, and it keeps changing. As a mortgage advisor, we know which banks are giving pre approvals, which banks are not giving pre approvals, or how each and every bank is working. And you really do not need to know all that, isn't it? This is our job. We will be doing all this job for you to show that this particular bank is not pre-approving anymore. Okay, so we can go live on that particular bank. So all these things we are updated every week, every day, especially now because the interest rates are changing every day, and we have to keep ourselves updated on what's going on, which bank is providing the best rates right now. So another tip would be to just, you don't have to fix all of your rates. Keep some floating, or break your loan into 1 year, 2 year, or 6 months or things. So these are the tricks that you can use too, just to reduce your risk of fixing it for 5 years at 7% or 6%, and then you see that within 6 months the interest rates come down to 4%. So that's another trick that you can use to reduce your risk. Important, very important to seek professional legal advice, because any document that you sign is a legal document. So do not sign anything before getting it checked by a legal professional. And it's a good tip that when you're buying a house, just have a look. Suppose you are just a young couple, right? And rather than buying a one bedroom house or a two-bedroom house, have a look if you can. It's if only if you can, right? If the budget allows, look for maybe a three or four bedroom house, because you know that your family is going to increase in another few years time, and you will have kids. So look into your future needs, because it's a big investment. It's not that if you bought something today and then next year you feel no, it's not suitable for us, um, then it's again another hassle to go through the whole process. So just future proof your house. If you have to sell that property, will it be resale? It's easy. Will it be easy to resell that property to get some money back for you? How's the location of that property? Is something happening in the surrounding areas that might increase the property value? So those kind of things, and we can help you in that. We can definitely help you in this kind of information.
So that's another really valuable thing, having a mortgage broker as well. Because again, we do talk a lot about this, and we want to reinforce it more that the first home should become a a tool to build more wealth. If you choose
Mm,
the right property from the very beginning, you can gain equity on that, especially if you
yeah.
choose the right location, right price, hopefully. And yeah, there's a lot of factors, so we want to
Mm,
highlight that a lot so that later
yeah.
you can use it for a deposit for another property later. So yeah.
Mhm. And that was one of the reasons as well when I said in the beginning that if it's possible, try to get the 20% deposit. Because if we
Mhm.
have the 20% deposit, it means we are building equity on the property from day one.
Mm.
So that's another advice. But if you don't, that's fine. That's fine, isn't it? Then we can use some tricks to pay the loan a little bit quicker so that we are equivalent and start building equity. And that's, again, this is something we can always help you. Always. You don't have to
Yeah,
worry about
that's amazing. So I hope you're learning. Again, if you're watching this recorded or live, would be good as well to take notes.
it. Yes. So again, coming up to, and I think we have talked quite a bit about this already. Um, the where our position comes in. What can we do for you in all this process? Because it's lots involved. It's not easy. It's lots, especially if you have a family, you have a full time work, and if you have to like take days off to visit the banks and do everything all by yourself. It's tricky, and um, get the advice. And why not? Because our services are free. You are not going to pay anything to the mortgage advisor get the work done for you. We get paid by the bank, and that is only paid once you settle in your house. It's not that half work is done and we are not available anymore. No, because we are only getting paid once you are settled in your house. And that's such a benefit for the clients that why not explore that? So we can assess your financial situation. We can already check your eligibility, whether you're ready or not ready. We can help you get mortgage solutions. This can be done or this cannot be done. Let's do it this way. We assist with all the loan applications and negotiations. And that was so cool. You wouldn't even know that we can negotiate the interest rates for you. We can, challenge the bank that this is happening. Can you provide that? And most of the times they do. Banks do say yes to those negotiations. Um, it's an ongoing support. You can call us anytime. The banks close at 5 p.m., Monday to Friday. We are literally available. Like, I get calls from the clients 7 o'clock in the morning and sometimes 8 o'clock at night. And that's fine. That's fine. It's okay because I know what kind of a emotional roller coaster you guys must have been going through. And that's where we are here to help. We have access to all banks and non-bank lenders. So if there is a possibility where banks have one, and it could be any reason, maybe a credit score, maybe uh, debt or anything, and banks are hesitating, we can go to a non-bank lender. And most of the times, these non-bank lenders are just a temporary solution. Once we are ready, we can go back to the bank. And we can do all of that. Definitely, we can do all of that. And as I said again, it's free for the clients.
Yeah. So why not avail it, right? So
Why not
yeah,
avail?
again, you're missing out if you don't have a mortgage broker. You really have to make it like a yes to inquiring to a mortgage broker before you even consider going to the bank, because
Yeah,
they will
yeah.
help you
And there's no
prepare.
harm. Yeah.
Yeah,
True. I actually wanted to share this story for, especially for our clients who think that they're not ready. So I wanted to share this success story where we helped a client to get into a home by using the advice, and what is the power of getting the right advice. So let's have a look. So just I've changed the names here. A young couple, they were wanting to buy a house. Of course, they were, but they had debts. There was no saving strategy. They wanted to, and which we all, right? We all want to, but we don't know how. So same, we keep buying, getting personal loans. They keep getting, spending money whatever income was coming, and good earners. It's not that they were not earning well, but the spending was way more than their earnings. And that's why, of course, they could not get their deposit sorted, and of course that will make you overwhelmed. You would be like, nah, I can't do that. So yeah, that's what the feelings was going through. And that's when they reached out and they had their discussions done. We did their assessments, and then we did a plan. So the plan looked a little bit like this, where we firstly had a look at how much debt are we looking at. We create a review and a reduction plan. One of the important part of a review is sometimes, if you are on a higher interest rate, we can help you move on to a lender or consolidate your debt in a way that your overall interest rate reduces, your overall repayment can reduce a little bit. So that was one of the strategies that worked for them. And then another one, as I mentioned, that they were good earners, but they were not saving. So we created a savings account for them and asked them to automatically transfer some money in there. Even a little bit amount keeps adding up, because there is no short. Anything we have is good. They also needed a bit of a budget coaching in terms of their spendings and extra online shopping and everything. So that's what another strategy came in handy. And we all get to know this from the bank statements. So you do have to share your bank statements with us, and then we have a look at that and assess your incomings and outgoings, and that's where we can help you with all that stuff. Kiwi Saver, so that's sometimes the biggest source of your deposit. If And that's another strategy that can come handy, is if you have 3% contribution, and if you think that we want to buy a house in the next year using our Kiwi Seva, you can also look at increasing your contribution. It means that that saving is already going into your towards your deposit straight away from your salary. So that was one of the options that worked. And if it's a couple, one of them can increase their contribution and other can keep the same, so that it's not a big effect on their salaries and stuff. So again, this can be looked, case to case. And then and it's not all, of course. If we are working on something, we have to review and check in and see how's everything's going, and we did. For that, every 3 months we had a check and see what worked, what didn't. We altered our plan accordingly. And there was a little child on the way, so we had to plan for that as well, which worked okay for us. And what happened? In less than 12 months, they were able to pay off their debts, and we were able to get 10% deposit sorted using their Kiwi Saver and some of the savings that they ended up doing, and they successfully purchased their first home. Just imagine that feeling. That
Amazing.
was one of the best feelings that we get as an advisor and they get as their first home buyers. So, what to remember here? Please seek professional advice before making decisions, because that's the gist of it. Very important. Get yourself some advice. Don't get lost in all that overwhelmingness and then end up with no outcome. Right. That's it from me. And
We have
if
a
there is
question
anything,
from Anthony Dulay here. I'll just pop it in the screen. How much deposit in percentage do you need to buy a second house, and what level of household income is usually required for to afford one? Quite a very specific one, maybe in general.
so for an investment property, if you already have a first home and you are buying it as a second home as an investment property, you need at least 35 to 40% deposit. And that deposit could be from the equity of your first home.
So usable equity for your
Yeah,
first
so you
house.
can use the equity of from your first home. Plus, if there is any additional savings you have, we can use that. But you need at least 35 to 40%, depends on the lender. And the second thing was, sorry, what was the second question to that?
Household income, what level of household income usually required to afford one?
Oh, that depends on the price of the house. So
Mm.
if it's a $1 million property, we will do all the calculations depending on your house, and more. And the major part goes towards the equity from your first house. And as I said, it is client to client basis. And if you want to discuss it further, feel free to get in touch, and I'm more than happy to have a look for you.
There you go. Thank you, Anthony, for that question. From AR Saniko, what are some common mistakes that first home buyers should avoid when applying?
Common mistakes. It could be not getting themselves assessed. And as you mentioned before as well, going straight to open homes and signing a document. Please do not do
Mm.
that. Make sure somebody is looking at a contract before you sign anything. um, Trying to think, sometimes some first home buyers think that, you know, the big checklist, they can tick all the check boxes. I think sometimes we should be a little bit flexible in our approach. Sometimes it could be one of the factors meeting, and if you have a big checklist, there could be like 9 out of 10 things are matched in that particular property. So go for it, but get an advice, get a professional advice. It's very important.
Um, the story that you've shared is really a very good example that even if right now you feel lost, you're not sure what to do, you're scared to take the first step, then you just need
Mm.
to have that someone like a professional one. That's why they are called professional, because they have expertise, right,
Yeah.
to
Yeah.
guide you. And a lot of people are too scared, they just decide that they're not yet eligible without really talking to someone.
Yeah.
So I think it will change the direction of when you can buy the house, when you decide to seek for
Yeah.
professional advice, because by
And
then
mm,
I think the
yeah.
accountability as well is one big thing. you
Yes,
know,
definitely. And I always talk to my clients. I said the whole buying journey starts from your mindset. We have to be in a right mindset to buy a house. Okay. Once we there, then the affordability comes in as well, because then we start, if our brains thinking that way, that we have to do the savings, then you will start working towards that. So that mindset is very important, that I am wanting to buy a house in next year. What can I do now? That's where
yes.
you have to start preparing it beforehand. Nobody, or I don't know if you ended up winning a lotto, but other than that, nobody can buy a house straight away. Like if I think today I want to buy a house and I go out in the market and buy one tomorrow, no, you have to prepare. It's always a preparation and planning involved in it.
Yes, thank you so much. That's very simple yet very clear, straightforward. So, of course, if you want to contact Neet, we have a link where you can book a call, check her schedule, and just have a really friendly, if it's in your heart right now, you're watching this live or recorded, and you're like, maybe I can get started, especially if you already have Kiwi Saver. That's 3 years you've been um, having your Kiwi Saver for 3 years now, please do get started and just see. Even if you don't have a lot of deposit yet in your bank account, just book that call. We have a link here. Just click that link and choose the schedule. And just want to share your website as well, Neet, with
Thank
your
you. Thank you.
mortgage supply.com, New Zealand, and you have awards as well. Top brokerage 2024, 2000, wow, 2025 as well. So they will be helping you, as you know. And I think some we have Filipino mortgage brokers in our community, but some also ones probably not comfortable with some Filipino. We have different behaviors. So yeah, we have options for you in our community. And I really hope that you've learned something today. That
And
you
that's
know,
the main motive. Yeah, education and making you guys aware is our main motive today, because it all starts from there. If you don't know, you really don't know. Now we know, then you will start thinking about it.
yeah. So if you watch this webinar, I guess this is a sign, it's a calling. Everything happens for a reason, right? And yeah, just have that courage to book that call, have a friendly conversation, and get assessed.
Yeah,
And I love what you said about mindset. And for me, I would say the decision that you will say,
yeah,
"Hey, I'm gonna
yeah.
buy a house," and then it starts from there. Because when you
Mm,
decide, it will open up. Like I think you will attract more things. And yeah, like I think you can talk also about co-ownership as well. That's another big
mm.
option, especially in our community, as long as you do it
Yes,
properly, so that you don't
yes.
fight. Right?
True. That's where I said it's important to have independent legal advice on that, so that there is an exit strategy planned for those people who are involved with this, and that's again very important, very very important. And I just want to add that I have my page as well. If anyone wants to have a look at my page, where it's Team Neet and Eddie, where I share my videos for the people who are first home buyers, or videos for like that might inspire people. So they can always visit there on Facebook and have a look at my page. They would find something, at least something informative for them.
So more information as well. So thank you so much. That's a really great webinar. We had a little bit of technical error, but in the end, it's a
Yeah,
good,
sorry about that.
really good flow. Yeah. All right. There's another question here, if that's okay. Last one. Before we end, when we bought our first home, we only used KiwiSaver and my savings. My partner did not use her KiwiSaver at that time. If you decide to buy a second home in the future, can she use her KiwiSaver for that purchase?
It's a very good question, and it comes across quite a while. If the first home is a joint home or for you and your wife, then it means she already owns a home, and she will not be able to use her Kiwi Saver to buy a second home. Okay. You can only buy your first home, use a Kiwi Saver just for your first home, and that has to be an owner occupied home as well. Okay, so if you buy, even if it is first home and you want to rent it, then still you cannot use your Kiwi Saver.
Yeah, so owner occupied. So
Has
yeah,
to
that's a
be.
good learning, Anthony. That's a good learning as well,
Thank you
right?
for your
If
question, Anthony. That was a really good question.
yes, that's a really good one. So another thing that I've learned a little bit about Kiwi Saver, example, if you're planning to use your Kiwi Saver, is put more money there, maximize the contribution,
Mm,
and this is like, again, this is a financial advice, but I'm a nurse, and we had this like a financial conversation with our doctors, and one of the insights our doctor shared is that he said that if you plan to use your KiwiSaver for your first home in the next 3 years, then I think you don't want it to be in a very high risk. This is
mm, mm.
again,
Yeah.
because so that it's available for you in the next
When you
few
need
years
it.
when
Yeah.
you
So
don't expect.
this is a Kiwi Saver investment advice that those advisors can provide, how to
Mm.
secure your Kiwi Saver for that shock. So yeah,
Yeah.
that's right.
We're very lucky that we have that. And so check your Kiwi Saver. Add more if you can to build that deposit. And then I think he said later, as soon as you've used, you can change it again because you're not going to need
Yes.
that money
Yeah.
the next.
Yeah, exactly. So once you think you have enough money, you can again go back down to, your minimum contributions, but you know that the money is there and safe. So
Yeah.
yeah.
So again, thank you so much for tonight, Neet. Please do book a call. You can watch this video again in our website if you want to book a call with Neet and have that assessment. No judgment, even if you still
No judgment.
um, even if you still have still you're still unsure again. Like
Yes.
as Neet shared in her story, within 12 months you could change that trajectory of your first home buy. Maybe you think you cannot do it. I know really know that there are a lot of people or community has been here 7, 10, 15 years. Imagine if you are owning your home and you are building that for saving instead of renting, because we know that renting in New Zealand is pretty expensive. So we
And
really
that's more
encourage.
secure as well. Yeah.
Mm.
Mm.
So yeah, that's why we encourage our community to start buying your first home. And this is, so beautiful to see our community actually growing. And because our mission in Pinoys and Ensign is helping Filipinos, of course, not just Filipinos, immigrants prosper faster in New Zealand. And as immigrants, we're blessed that we get to become resident citizen in this country, and that's really the beautiful thing about New Zealand, right? Like you get to plan long term, retire here, own a property, start your
Yeah.
business. So there's so many opportunities for us here. And so we just have to shift that mindset that we're not just here to work. We're here to actually build wealth. And one
Yes.
way is through property. As soon as you get into one, there's more opportunities for you.
Yes.
So
It
thank you so
always.
much.
Well, thank
Thank you
you
so
for
much
having
for
me. I am
tonight.
thank you so much for having me. I'm so feeling so blessed to be able to talk to so many people, and I hope it would have been educational for them. Some of them might have get their doubts cleared. And as I said, if you need any help, um, get in touch. I'm here. I'm here for
So
you.
Anthony will be getting in touch with you, Neet. So he said, I'm actually looking for someone that can help me. I didn't get your number a while ago, so I can. So yes, just book the meeting. Just click that link, Anthony.
Yes,
Thank
I
you
would
so
look
much.
forward to looking, Anthony.
Yes.
Thank you.
Good night, everybody. Thank you. Bye,
Good
Neet.
night.
Thank you so
Bye.
much.